Good morning, guys, and welcome to your market report for this Friday, the 1st of March, 2019. Welcome to the show. Really glad to have you guys here. Let's get started. Let's open up the charts right here, and let's take a look at what's going on. The first thing I want to talk about is the silver price, It got knocked down quite a little bit, It's down to 1550. It's down the lower end of its range right now, and let's take a look at gold. Gold's at 1307, down $5.40. Let me get this chart stabilized here, and it's on the lower end of its range too. I'll tell you what, the paper manipulation markets, it has not ended yet, but gold and silver are right now poising themselves, or positioning themselves, I think, I think the bear market is extremely long in the tooth for this in the gold and silver, and I think we're getting ready. We're getting ready to start what's going to be a very long bull market in both gold and silver coming up in the future, and not too distant future either. Now, let's move over and take a look at cryptocurrency today. Cryptocurrency's been holding its own rather well, and it's been showing bullish signs. If we move back on the chart here, we're going to have to go move back like on the 15-minute chart. No, let's go back a little bit further. Let's go back to the 30-minute chart. What you can see is the lead into both of these falls. I think these falls, there was a couple big falls. The biggest one was right here from 41.90 all the way down to 37.12, it looks like. That, I think, was caused by one entity. And I think the same entity caused this one here that spiked down, and this little one here. There's three of them here. But what I notice is every time that Bitcoin starts to slowly bounce back, and what we see is a pattern where it's slowly ascending upwards, and it's still doing that today. I wouldn't be surprised. It's 38.09 right now. I wouldn't be surprised if it's like 38.25 by tonight. Or 38.40, something like that by tonight. I think this entity, whoever it was that caused this, I think it's probably a whale dumping coins. I think they're done. They probably sold all their coins. Big mistake. Big mistake. Okay, now let's take a look at cryptocurrency market capitalizations. $130 billion. Bitcoin dominance 51.9%. And we're seeing the zigzags here. It was caused by that event of that selling of the coins. But Litecoin is heating up today. It's 1.7% up. It's at 47.22. It's starting to head back up toward $50 again. It's heating up rather quickly. And so is XRP. XRP is at almost 32 cents a piece. They're up 1.8% today. So market capital 130 billion and Bitcoin dominance of 51.9%. Now let's take a look at the pre-market data for the Dow Jones, and we're seeing a lift in the Dow Jones of 175 points up today on the pre-market, and we're looking at the futures are saying it should be 26,090, up 177 points on the day. I'm going to tell you something. Well, I'm going to get into it in just a minute. Let's first take a look at oil. Oil's been slowly creeping upwards. It's up 19 cents on the day, up 0.33%. It's at 57.41, and it's been slowly climbing. OPEC has everything to do with this, why the oil price is climbing. They've been making cuts to output supply. There's 12 tankers floating in the ocean out there that are essentially empty. They don't have any oil in them. It's all got to do with OPEC. OPEC is strangleholding the price to get the price up. Now America is producing oil like crazy. If it was all America, oil prices would be down to about $15 a barrel right now. You know what I mean? The way they're pumping it out of West Texas is unreal. Anyway. Now, let's take a look here at bonds and rates, and I want to talk about this for a minute later. I'm going to come back to this, but we're seeing rising bond yields, and not by small amounts. The yields are starting to climb pretty fast. We're looking at The whole long end of the yield curve is moving. Moving up 2 basis points in the 10-year. 10 years at 2.73, the 30 years at 3.09 today. And this is where they're standing. 5 years at 2.53, and the 2 years at 2.52, and the 3-month, which is the short end of the yield curve, is left unchanged today. Well, let's move on and take a look at the dollar. I think the dollar is starting its descent. And it's at 96.17 today. And I think the dollar is starting its slow descent, which will be slow at first, but it's going to pick up steam later as the recession intensifies. The worldwide recession intensifies. I was taking a look yesterday at the Italians, and Italy situation is going to come back around again. The situation in Italy, it's not gone away. It's going to intensify again pretty soon. They've revised the Italian GDP downwards. The real Italian GDP, you can look it up. It's listed at negative 0.2%. They gave them the credit for their GDP, the European Central Bank, and they said 1.2% growth. Well, now they've revised it down to 0.2% growth, which is still positive. But anybody in their right mind can look up the real Italian GDP, and it's negative 0.2%. How come the European Central Bank is giving them positive 0.2%? But even still, they've lost a whole percentage of GDP. This is not reflected in their budget. The Five-Star Movement has a luxuriant budget that they have to have, because the Italian people, if they don't have that luxuriant budget, if they make cuts into pensions and stuff like that, if they do austerity measures, the way the scene in Italy right now, the people are sick of austerity, and believe me, they will go nuts if you start to go back to austerity. They've had enough of it. And so what are they going to do? Because Italy right now is basically broke. They're living off of selling bonds that are worthless. And the European Central Bank now has decided that they're going to have a talk with Italy pretty soon. They're going to basically, I'll tell you what the talk's basically going to be about. It's going to be, we want you to make cuts, deep cuts into your budget. Well, if the government there does that, the people are going to go nuts. Simple as that. That's what the situation is. But now let's move back to bonds, because this is what I wanted to talk about this morning. I knew this was coming. I knew these bond yields were artificially low, and I knew these yields were going to start to go up. Well, they've started to go up now. It's exactly what I expected. And I expect the U.S. 10-year, let's take a look at the 10-year specifically, because that's the important bit, is the 10-year. What we're looking at, I'm going to have to go back to the 5-year chart to show you guys this. You see in July right here of 2016, it was at its low. Ever since then, can you see this steady line trending upwards? Well, we just came down this mountain right here, up here. There's like a mountain, and we just came down it. And so it made it look, for a period of months now, it's made it look like bond yields are falling, when actually bond yields are actually rising. And you can see this trend line right here, running up through here, shows that they're rising. Well, this is going to continue. We're just at the bottom of a little dip right now, and they're going to start rising again. I see them rising, the U.S. 10-year rising past 3%. It's at 2.73% right now. I can see it rising past 3%, and I still hold to my guns what I said months and months ago. I said that when it goes past 3.25%, that's when we're in trouble. That's when everything's going to start to roll over in the economy. We're starting to move now. And believe me, we can move pretty quickly. We can move back up over 3% pretty quickly. It'll surprise you guys how fast it can happen. This could be our trigger. We don't really need China as a trigger. The world's economy is a tinderbox. It's like if a guy piled up a big pile of hot, dry brush, you know? All it needs is a spark. This is this could be our trigger is the bond market. Watch the bond market. And specifically in the bond market, watch the 10-year. I say when this thing rises over 3.25% and is on its way to 3.5%, you cannot believe how much money these people have lost that bought in like at 2.6 something, 2.65 or whatever. They're already losing money right now. If a bond moves from, say, 2.65 on these long-term bonds, if they move from 2.65 up to like 4%, you would not believe how much money that person loses that bought in at 2.6% or whatever. You know, and so you can lose money in bonds. Believe me, you can lose a lot of money in bonds. People don't realize that. Bonds, you know, this bond market is going to continue to rise. And effectively, what's going to end up happening in the end is stocks. It's going to start to affect the stock market at a certain point. And that point, that trigger point, is 3.25. We've seen the volatility in the stock market when the bonds were up at 3.25 before. They touched 3.2. And we've seen the volatility it caused last time, and it'll cause that volatility again, especially if it pushes right on through 3.25 on the 10-year, and it pushes right up to about 3.50. You know? And this is where we're headed. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye, guys.